Hey guys, it's Kemo here. I'm going to try to give you a little update video from what we were talking about earlier and why the trend can remain strong. So I wanted to bring your attention to Sir Isaac Newton's three basic laws of motion. So I apply this to the charts. It's something that I thought about years ago, and when a trending move starts, it starts. So the first law of motion is an object at rest will remain at rest, and an object in motion will remain in motion unless acted upon by an unbalanced force. So let's apply that to the chart we have here arranged. That lasted some 6 or 7 months. This is an object at rest will remain at rest unless if an action is acted upon it. And coming out of there is an object in motion tends to stay in motion until an equal or opposite force is applied upon it. So far, we don't have any equal opposite force acting upon it, so it can stay strong longer than you expect. As we can see here, what happened today, well, yesterday's candle, very large daily candle, largest in history potentially, as far as dollar value. But it just kept pushing. And what you have there is the CME shorts that are closing aggressively. Anyone who's short here that got gapped up, it gapped past their stop loss over the weekend, and now they're aggressively buying in order to close those positions. So the force is definitely up on this until otherwise. Second law of motion, the net force of an equal object is equal to the product of its acceleration and its mass. Now this really applies to cryptocurrencies and Bitcoin in general due to their size. Because their size is so small, the force that's acted upon them doesn't have to be as large to really make it move. So it's the difference between a large boulder and a small soccer ball. And if you have the same person pushing on a large boulder, it's not going to move very much. But if he's pushing a soccer ball, he can kick that thing across a soccer field. So that applies pretty well. And the third law of motion is for every action, there is an equal and opposite reaction. So every action, this happens in the chart, there will be an equal and opposite reaction. So let's demonstrate that here with the object in rest and price coming down here, you had an action. Now you have an equal and opposite reaction. Price failed to break down any further and keeping a beach ball underwater, and now there it goes. So 3 laws of motion by Sir Isaac Newton hundreds of years ago still apply today, and applies in many ways, more than you would think. But I apply them to the charts, and hope you thought that was interesting. But let's get into some price details here. As per usual, my charts are in log scale. So I'm going to take the height of this entire range and just measure the box around it. And then I'm going to take the entire box, hopefully, and place it at the breakout point, breaking out above it. If the range target is held, we should see 108 eventually. And that kind of makes sense with various other methods of getting a target. That's like the optimum range break should get you up there. You may go way further, but this would be a spot to look for. As soon as you break a range, you have you have an action, an opposite and equal reaction. From there, we'll see you may have an equal and opposite reaction down, or it just continues up. And then you go with the larger time frame where you have an action down and an equal and opposite reaction back up, and it goes way higher. Given the range here, if this is a distribution as per Wyckoff, and this being an upthrust after distribution, your target should be roughly the height of the range. It should be the meat of the range, so maybe we should make it a little bit smaller. Let's move it down here to the meat of the range. Probably already made that target if I had to guess. Not quite. 94K should be the target, which I could easily see that if this thing wants to keep running. If you still have the Chicago Mercantile Exchange buying this up and people sidelined that just want to get in at any price, you can definitely see this thing keep going. I mean, just at a glance, the way this looks, this price action looks like it's going to repeat somewhere up here for another push. Maybe that gets you to 100K, maybe just over it. I would say if you get over it, probably 106 to 108 would be a target that I would look for. And after that, expect at least this leg to repeat, but I'd look 50% retrace of this area, like all the way down to 85 would be an area. Usually, if you have a large expansive move like that, Dow theory tells you to buy 50% of the retrace. But for that to happen, I would expect, what is this, 3 days? Expect 3 days or so to hold up here. If that happens, it's probably not coming down for a bit, and it's going to extend that leg. 99, maybe 99K might be the target. And you get a pullback, and then repeat that. So we'll go down to the 4 hour here and check on our object in motion, see if it'll stay in motion. This area right here looks like it's matching that area, so we could have that pop up like that from roughly here. That looks all right, and then some grinding sideways for a few days. And that's where you're really going to have to pay attention to closures on a 4 hour or higher, because this whole move up has been 4 hour higher highs and higher lows all the way up. And if this thing wants to keep going, I'd expect that to be maintained. So if that area is to match what we're currently doing, I would expect no closures below that current 4 hour low. And actually to continue kind of slowly grinding up. You may get a push up and tomorrow get a down candle. That may close you a lower low, and you may have a lower high to sell into to start grabbing some of this liquidity. You never know how low it'll go. You have to wait until you get to the daily higher low area, which I do believe will be around 79 to 80K. So you might get a wick down there, but remain closures on a daily scale up there, and then look for a 4 hour uptrend out of there if you end up getting that opportunity. I know right now it doesn't look very likely, but it's always a possibility. And one final thing before I go is mentioning the overall thesis of kind of what I was looking at as far as wave patterns, because I've been matching this with this. And now what we have coming out of there is this. So be on guard for a potential move down similar to this before resuming up to target. I know it doesn't seem very likely right now, but I could totally see it happening if that leg is to match this move up in some shape or form. Then you would have a push down, fairly abrupt, and it would look like a total rejection there. That would look like an upthrust after distribution, but it would really just be a back test of 73,400 or so. So it would be a back test of the breakout, similar to what this did in reverse before its final push up to over 100K. Just wanted to bring that to your attention, just in case. You never know what's going to happen with price action. If the futures exchanges are all panicked out of their shorts and they had to buy and they're all done buying, then the main buyer here might be gone and then it comes back down. So I'd look for an opportunity if price does get back down there. I'd look for some kind of pattern to come out of there. So hope that was helpful. I almost forgot the star of the show. The star of the show being the CME chart. Very large gap there. Everybody knows it's there. The week opened up strong. New York session on Monday went strong, kind of ran away from this gap. So you know people were trying to sell into this, expecting to be able to fill the gap. No gap fill, and you pushed higher. They may want to come and fill that within the next few days. It's something to certainly watch out for. But something I did notice was this candle. Look at the volume spike on that candle, around 87.7 on futures. So that would be around 85, 86. That might be the pain point where they just said, screw it, I'm going to keep buying. So if price does come down there, you might get a similar volume and another CME trader will close, and that bounces it up in this area for a while. Certainly things to watch for. Like I always say, don't get cocky. It was a nice move up. Hopefully you guys secured some profits. I'm not saying take everything off, but it doesn't hurt nobody to take off 10%, 25%. Me personally, I've been closing and opening trades all up in here on a lower time frame. 4 hour, I got a very nice fill somewhere in here. I think it was when I went live with Creative Precious Metals and Kemo Finance over on the Watt podcast. That should be coming out next week, so check that out too, guys. Yeah, other than that, keep your stops tight. As soon as this is closing a lower low, watch for a lower high, and then your correction can start. Until then, everything looks strong. Even the 1 hour, higher high, higher low, higher high, expect a higher low, and continue pushing. If you close that lower low, expect a lower high, and maybe a head and shoulders pattern that'll give you a nice correction down. There is a CME gap. A lot of people like to fill the gaps. We'll see. But yeah, still long and strong until the chart says otherwise. So have a good night. Keep your stops tight.